Good afternoon, friends, and welcome to today's discussion on Expert Speak. When we talk about the future of credit cards, I think there could be no one more apt to be discussing this with than Mr. Manoj Adlakha. He's the CEO of American Express Banking Corp India. Manoj leads the India country executive team that is responsible for driving financial results and growth for the Amex domestic payments business. He's got over 3 decades of experience in this space. He heads the consumer business, the brand and marketing function, and provides leadership oversight to the company's commercial cards and merchant business. So, Expert Speak is unique because it helps you hear directly from the senior management at financial institutions in terms of how to manage your finance better. Manoj comes to us with deep insight, which is going to guide us today. I'm also happy to note he's won several accolades, including India's most trusted CEO by World Consulting and Research Corporation. So, Manoj, welcome to the call.
Thank you, Adil. Pleasure to be on. Thank you very much.
So, Manoj, let's start with the first set of questions, and we're just going to talk about the future of the card market. Now we know that India has about 54 million cards live today. Where do you think this is going to be 5 years from now, Manoj?
Sure. You're absolutely right, Adil. If I just may backtrack a little, it's interesting, this whole journey of getting us to 54 million at an industry level. That was where we ended 2019 with. The first credit card was actually launched in 1980 in India. And since then, up to 2010, 30 years, there were only about 20 odd million cards. And then there was a little bit of a thrust from 2010 to 2015, where the cards went up to about 18 million. But amazingly, what has happened is in the years 2018 and 2019, those 2 years, we have been phenomenal in terms of growth for credit cards because over 20 million new credit cards got added on in just 2 years. So, if you look at the journey, what happened in the first 30, 35 years has really almost the same amount has happened in the last 3 to 4 years. So it's an absolutely amazing journey on which the cards have, the growth that everyone has experienced. Um, Within the card industry per se, there is, to your point as to where is it headed. If you look at, the fact that we are growing at such a rapid pace, we're adding on at an industry level close to last year 2019. 2020 is a little bit of a, for all the reasons everyone knows, your audience would know, is because of, COVID is a odd year. But last year close to 15 million new credit cards were added on, so about 1.3 million new credit cards get added on a yearly basis. So if you apply that principle, we will, be looking at this growth rate for 20 over the next, can you hear me?
Yeah, I can
Hello?
hear you. Yeah, I can
Okay,
hear you, Manoj.
I'm getting some sound. Uh, okay, so I can see this go up to about 175 odd million cards over the next 3 to 4 years. Hello?
Can you hear? Yeah, yeah, I can
Yeah,
hear you.
I think
Can you
I'm
hear
getting a
me?
bit of disturbance. So,
Got it, got it. But I heard you clearly. So I think you said
yeah.
175 million cards, right?
Yeah, yeah, yeah,
Yeah. And where is this growth going to come from, Manoj? Can you help us understand that, please?
yeah. One sec. Yeah, there was some. I don't know. Adil, I'm getting a little bit of a disturbance at mine. I'm sorry about this. So,
No, you're fine. Please go ahead.
okay. So the growth is really where we feel the growth is going to come from is
Go ahead, Manoj. I can hear you.
hello.
Yeah, I can hear you, Manoj. Go ahead.
Okay. So the growth is really going to come from the cities which are uh, outside the what we call the tier 1 and tier 2 cities. So 50 to 60% of the new growth is actually going to come from them. That is the way, if you look at it from a geography viewpoint. If you look at it from a demographics viewpoint, then the growth is really going to come from the far younger segment. So as an example, almost 35% of the new cards that are getting added on at this point in time are those who are below the age of 30. So there is a lot of growth which is happening, where people who are young are the ones who are acquiring new cards. So that's really what's going to happen. And the last piece is new to credit. So if you look at the new to credit, customers, that is again where there will be a lot of growth, because 30% of the cards that are coming in are people who have never had a credit card earlier. So that's again another thing that'll be happening.
Got it. One of the interesting questions that always comes up, right, is we've seen this revolution in UPI. Are credit cards and payment instruments like UPI going to coexist, or is one going to challenge the other? Just help us understand these dynamics
Sure.
as someone who's seen this up close, Manoj.
Sure. So, the way the credit cards.
Manoj, can you hear me? I'm having some trouble hearing you. No. Are you able to hear me? Can you hear me now? I can hear you now.
Hello.
Yeah, yeah, this is better. This is better. So maybe just the last part of the answer, Manoj, in terms of UPI and credit cards, how is it going to play
Yeah.
out?
So yeah. So what I was saying was that the way it's going to play out is that UPI, from a sheer volume of transactions, is going to continue to increase at a very rapid clip, the way it has been. Last month we did close to 2 billion transactions at an industry level, which was about $48 billion, and 75% of that is P2P, where people are transferring money from one mobile account to another, and about 20-25% is what is called P2S, which is person to a merchant, or P2M, person to merchant. So that's really the way. So UPI will continue growing. Credit card, it's our estimate, will grow in the range of about 25% or so next year. And it goes back to the question you asked me earlier as to how many credit cards are expected over the next 4 to 5 years. It's our estimate that credit cards, which have grown from 18 million in just about 10 years ago to 58 million, that's a number now. We believe that in the next 4 to 5 years, that number will grow to about 175 million. That's our estimate on credit
Well,
cards.
yeah, yeah. So that's a very large number. I think essentially, if I can summarize what you're saying is, though UPI is growing, credit cards, it's on its way from 54 million to 175 million in 5 years' time. Now, a credit card is useful for a number of things. Now, in the market, Amex is known to have the highest spends per card. So people like using Amex cards. How have you built up that kind of portfolio? Because spends is a key metric which makes the
Yeah.
business profitable.
You're absolutely right, Adil. It's not only about just getting cards into somebody's wallet, because I've always given this analogy that card is, an expense. It's till the time it's in somebody's wallet, it becomes a revenue generating, mechanism once it's taken out of the wallet and spent. So to your point, it's very much spend is the right metrics to look at. So for us, we are at about 2.5 times the industry average on spend, and a couple of reasons for that. One, is the world class service. We feel very proud about the service that we provide to our card members, because card is, an instrument which can be easily commoditized, right? You come out with features and benefits and somebody could replicate those within 24 hours. So that is one aspect. So service which is absolutely world class, differentiated service 24/7 is what we provide. Second is the value proposition. So we, identify the and target, we are very clear about which is the target segments that we are catering to, and then customize our products, and put the value appropriate value proposition, and price it, most importantly price it appropriately to meet the needs of that customer segment. The third piece I would add over there is rewards, as we call it a currency inside within American Express. It's been there for 2 decades, and it's a very very big you know uh, instigator for customers to take the card out and use it to spend on the card, because this is what creates card member insistence. And when we have compelling rewards, when we have like I said, world class service and the right value proposition, which could be offers, other benefits which come with whatever, that makes a world of a difference. And the last piece I would want to add over here, we are the only ones, Adil, who have what is called a charge card. And just for the audience, the difference between a credit card and a debit card, everyone is of course fully aware of. Debit card, the moment you spend, your card gets your bank balance would get automatically debited by that much of amount. A credit card, typically you have a line of credit which is made available, and you can spend up to that line. A charge card is the third kind, and American Express is the only one who has a charge card where there is no preset spending limit on the card. So effectively you can spend. Of course, we take into account the past, spending and repayment pattern to look at how much can you spend, but that is the way the charge card works. And that also typically, a lot of affluent customers are very comfortable using the charge card and putting a lot of their spending, whether it's travel, entertainment, high-end retail, dining, what have you, on the charge card, because then they're not constrained. They don't have to worry about the fact that they're very close to the credit spending limit.
Fair enough, fair enough. So, on that note, right, let's move to talking about rewards. Now, credit cards make a lot of sense for the rewards they offer. So, let me just ask you something informally. What is your favorite reward on your card, Manoj, which makes you pull it out of your wallet?
Uh, you know, there are quite a few, and I don't know where to start. But firstly, I only use the American Express card, and within, as an example, a lot of us and I'll give you a very current example, which is where all of us, many of us, are locked in because of COVID. So a lot of spend has started to happen on online. So within American Express, actually 80 to 85% of our spend by our customer base at this point in time is happening online. And we have created a platform which is called Reward Multiplier, and which has about 60 brands at this point in time, and the numbers are only increasing. This has just been launched about 2 3 months ago. So while there is a regular reward earn that you get every time you spend, whether it's online, offline, but with this reward multiplier, which is a very easy to use platform, it's just at the click of a button. You go into the platform. You want to spend on Amazon, you want to spend on Flipkart, you want to spend on Marks and Spencers, you want to spend at Decathlon. I can go on. There's 60, 70 brands, and that number of brands are increasing depending on the card you have, the product type you have. You will get 2 times up to 10 times the reward point. So depending on the card type. So in some cases, if you have a particular reward product type, you would get 10 times the reward points you would have otherwise normally got if you just use this platform, and you have to do nothing but use this platform. So it's an and the kind of feedback we have got is absolutely amazing. So one is this, we call it a reward multiplier, and suddenly your rewards have accumulated so quickly on what you would otherwise normally do. Then we have things like lounges, which of course right now with travel restrictions are not there. But weekend getaways have picked up in a very big way. So a lot of people are driving to places close by, and we've got some fantastic stuff which is going on over there. With some of the top end resorts, hotels, high end, and even very very affordable ones. And the last piece I would mention is, even as an example, online delivery. We've got so many offers that we have worked with the merchants, which whether it's five-star hotels or standalone restaurants who are now delivering at home. So those are some of the things that we are using, not using, we are offering to our card members at this point in time.
Makes sense. And just on all the e-commerce sites, and you mentioned that over 80% of consumption is happening over there for your members. You find this EMI on card, and we get asked this often in the media. This is genuinely effective zero EMI, because you pay the same amount whether you use the EMI on card or you pay directly. How is the response to that particular product of EMI on card?
It's amazing because it's really like a product and product, right? So what you can do is you can decide to pick up your high ticket, so you have a card as a payment instrument. So let's say you decide to go and buy that television set, and you don't want to hypothetically, let's say it's 30,000 rupees. You don't want to end up paying the 30,000 rupees at that point in time, but at a very low level of interest, low rate of interest, you decide to make that payment over the next 12 months in equated parts, in equated monthly installments. And that is the way the EMI works. So it's like, instead of going and taking a personal loan, you go and do it at point of sale, right? And you say, okay, this particular transaction, it's a slightly high value, I don't want to pay up. And most importantly, what it does, it releases your line. So it gives you that option to utilize that line for your other purchases, and this money is kept aside, which you're paying over a period of time, and you can choose the flexibility. The choice is something which is totally available with you. You want to pay over 3 months, 6 months, 12 months. So it works wonderfully well, and there's a lot of adoption and a lot of take up on EMI specifically.
Fair enough, fair enough. And consumers are also seeing a growth of a buy now, pay me later. I've always been curious, right? When you're checking out and you have a EMI on card option, or you have a buy now, pay later option, how should consumers think about it when they're choosing between these two, Manoj?
Yeah, Adil, absolutely. And this is a more recent trend, while it's been around in Australia and UK. In India also, it's really come up, and it's gaining traction. The way I look at it, credit cards and by BNP, it's called Adil, BNPL or SNPL, depending on which institution has launched it. So when you look at buy now, pay later, that is really and it works slightly differently in the fact that you know you look at it like a digital khata. If you remember those khatas, we when we were growing up, we used to have, where you'd have your mom and pop store, and he would put he would keep an account of all your expenses, and at the end of the month you would go and clear up with him. It's something like that. So effectively, depending on the institution you tie up a BNPL with, you could have a 15-day or a 30-day. Typically that's the way it works, and at the end of that 15 or 30 days you make good the entire payout or the payment. And typically, the way I see this, the customer segment it's operating to is slightly different than the credit card segment. So this could be something which is it's done at point of sale by the merchant. EMI, to the earlier point that you had raised, can also be done at later. So you do your point of sale later on. You could decide after you've done the purchase, you could call up a call center and say, what, I want EMI on the card. That can also be done. So there is they're not competing with each other. Both will feed off each other. And I also believe that they operate to different segments, with credit cards really operating, in BNPL, which is buy now, pay later. There's no physical payment or physical instrument. It's an app really, and that's how do the transaction. So both can coexist, both will coexist, and there is enough room and more in India for everything. The piece I would want to add over here also is that digital payments itself, when you look at the total, the best way to look at digital payments, where digital payments is the numerator and the denominator is the private consumption expenditure. In India, that number is 10%. So only 10% of the private consumption expenditure is on all forms of digital payments. So 90% is really cash. So whether you look at buy now, pay later, you look at UPI, you look at credit, debit card, there's so much. All the biggest competitor is cash. And if you were to look at pre-COVID, very interesting. I mean, if I can give you a reference point here, lot of online was spending was happening even then. But interestingly, and this was I think quite unique to India, where what terminology which a lot of your audience may be familiar with, which is called COD, which is cash on delivery. So when you were ordering from the Amazons or the Flipkarts of the world, a lot of people, 60% of the settlement actually used to happen on cash, with cash. Now that has changed dramatically. So the adoption, because of COVID, where people are not even comfortable handling cash, they're doing online, they're spending, so that now the cash transaction is not happening. It's actually moved to some form of digital payment. So that cash is really getting out and out of the system, which is a good sign.
Yeah, absolutely. We wrote a white paper saying that if you can use your credit card smartly, there's so much reward to be earned, assuming that you can pay your bill back on time and in full, that it's actually much, much smarter. And we did a case A, case B. Case A being someone who spent with a credit card and got and claimed the online reward, and case B, someone who did only cash on delivery. It was completely mind blowing. I think seeing that
Absolutely.
you could save up to 10,000 rupees a year just by using your credit card smartly.
Yeah, you're absolutely right on that.
Okay, so let's move to the last section now, Manoj. So you've been, ever since I've known you, right, which is close to a decade now, a big proponent of the role of digital. What has COVID done, and what is digital now going to look like for the credit card industry?
So, digital is a journey. I think anyone who decides not to embark on, it'll be, you know, um, it can only come and hurt them in the back, and hurt them very quickly. So, digital is, it's not only about uh, moving from paper to paperless. It's about a digital mindset, and that starts with prospecting. How do you get onboard a customer? How do you firstly target a customer, then how do you onboard a customer? Everything digitally. And then how do you transact with the customer through the life cycle of that customer digitally, and right up to the credit and collection stage. So at every stage, and including, of course, we just spoke about online transactions, so everything would be digital. COVID, if anything, what it has done, Adil, is it has fast forwarded the digital journey. So, what would have otherwise typically taken, I feel, another 5 to 7 years, we have seen in the last 5 to 7 months since COVID has happened. So it's amazing. The digital adoption. What your institution is doing is absolutely amazing through uh, opportunities which it is providing the other financial services players with things like video KYC and so on and so forth, which are absolutely fantastic ways where now, from the comfort of your own home, a prospect can take on, or can now get a card. So it's just amazing. And like this, I mean, I'm giving card as a reference, but all financial instruments. So digital is the way to go. Digital is here to stay. And what we are seeing right now, to my mind, is a very small wave of digital. This will, the way forward is going to be things like artificial intelligence, machine learning, face recognition, biometrics. Those are going to, and it's going to happen, where we have got to over the last 5 to 7 years in digital at an industry level. This is not going to take that much of time, right? So when you look at Aadhaar KML, and you look at video KYC, they've just come. and there will be now such fast traction on the digital of tomorrow is going to be here sooner than all, and it'll be better for all of us. So it's something we're all excited about.
Makes sense. And as CEO, you obviously interact also with the government and with the RBI. Consumers are clearly telling us that in COVID, they want this with no paper, no meeting. Could that be permanently the new normal, that you can get a credit card without having to submit any paper, any meeting? Is this something we're seeing that's temporary, Manoj, or is this the new future?
uh, I don't believe it's temporary, because there has also been a mindset shift where there was, like I said, there's a digital adoption. So that has happened. Now people have got used to this. Let's call it the new normal, and people have got used to this. They're comfortable with this. They're very, there was always a worry on the security aspect of it. I think as they're dealing with the fintechs, they're dealing with the financial services institutions, and to my mind, it's a very symbiotic partnership between the fintechs and the financial services institutions, because when they come together, one is bringing the technology infrastructure, the technology know-how. The second is that is what the fintech brings to the table, and the electricity or the agility with which they move. And then the financial services is bringing the brand, the customer base. And it's such a potent combination when the two of them come together, that the problem statements that a financial services, and we've had this first-hand experience of dealing with you and your team, Adil. When we deal with institutions, you send out a problem statement within 3, 4, 5 working days. The fintech partners are back, and they're telling us how we could do things differently and do them everything with very clear one objective in mind, which is keeping the customer front and center and taking friction away from the process.
Got it. Now, this journey we've been talking about, from 54 million cards to 175 million cards, is this going to be all about partnership? And is there a sort of guidance you can give us, saying that what percentage of the business do you expect will come to you from these kinds of fintech partners when you look into 5 years in the future, Manoj?
In my view, a significant part, because they will have a very, very significant role to play. And at the end of the day, r- we mentioned, I mentioned about right from helping identify customers to onboarding customers to doing CRM to the whole journey. So it's going to be it's going to be an imperative. So I don't think of it's the order of the day, and a fintech partner along with the financial services um, player will have to build this thing together, build the ecosystem together, and coexist. And for us to have a win-win proposition and outcome for the customer. So the future of the 175 million that we spoke about is going to come through. It's not that it's not only going to come through these kind of partnerships, but a majority of this is going to be led and driven by the partnership between fintechs and financial services companies.
Very exciting to hear. Now, I would say that the biggest innovation we've seen at Bank Bazaar during the lockdown has been contactless. Video KYC, no meeting, no paper. When you look into the next year or two, Manoj, what are the exciting new innovations you see coming out on the credit card product front?
Yeah, so like you said, some of those contactless and all are very exciting. Definitely, I see. Maybe it's a little futuristic, but face recognition. At the end of the day, imagine going into a store and your face should be able to you. There's no question, no question of having a physical plastic or a physical, that uh, form factor should not be there. Your face should be the one, you're checking out, because all the recognition is done, and the authorization and everything has gone through. That could be one way. I don't know if it's going to happen in the next 12 to 18 months. Variables, should be another way in which the transaction should be facilitated, basically just on whatever variable you have on your so those could be just some of the form factors. But I can see the way technology has leapfrogged over the last 3 to 4 years. And I really believe, Adil, that this is only the beginning of bigger and bigger things to come. And, when we look at robotics, AI, ML, just the opportunity that they offer for, what the future, and let's call it 2030, which is 10 years from now, it would be a far different world than all of us could have ever envisaged. And it will do wonders for the financial services industry, card being one component of that.
Sure, sure. Manoj, one last question. I know that you've had a ringside view into multiple sides of the business. You can, talk about tech, but you can also talk about risk in business. Now, when you talk about all this technology, right, one of the things that people ask is it safe, right? Will it increase risk if we are going to use no meeting, no paper? Will risk increase, right? What do you think about how technology and risk intersect in the credit card market?
Yeah, I think that's a very valid concern, because at the end of the day, you know, risk and fraud, I would add fraud to that, because, more about when it comes to cards which are issued, people, it's the card issuers who really take the credit risk, right? But fraud is something a customer is always very concerned that, when I incur a transaction online, or when I'm, doing something with technology, would my card get compromised? But the kind of systems, the kind of checks and balances which have been put in place, and are, even as we, they'll always remember, a fraudster will try and be 2 steps ahead of you. That's the way it works. But, the kind of fraud ratios to billings that are out there in the market in India, they have been kept totally under check, despite the online billings going increasing dramatically, despite the digital adoption, despite digital as a means of acquisition and digital payments going up significantly. What we have not, and that's compliments to the entire industry who have done a great job in keeping the fraud at bay. So, I think a lot of risk modeling goes in, a lot of fraud capabilities are being built even as we talk. And that is something which my only word of caution over there is, we can never take our eye off the ball when it comes to fraud, because at the end of the day, if the transactions are safe and secure, we will always have the trust of the customer. The moment they start to feel a little wary about that, that is when things can become ori. But right now, the way things are, I believe that the customers are very comfortable in transacting online, and with all the technology that is being built, uh, you know further and further augment into building on this going forward.
Fair enough, fair enough. So I'm going to move to just closing now, Manoj. A lot of people are just coming out of or restarting business and work once the country started opening up. It's still a tough time for everyone. Any last words of advice that you'd like to leave our viewers with in terms of getting through this tough phase and looking forward to next year?
Yeah, so first and foremost, be safe. That's absolutely my personal advice. A lot of us are working from home. I don't see anything, this is a new way. Who had thought when 2020 started that this would be the new way, or new world order, so to say? And so stay safe and healthy for yourself and for your families and dear ones. Importantly, I think the key thing is to have a positive outlook, because things will bounce back. It's a matter of time. It's not if, it is when. And once things bounce back, all I'd like to add over here is that once things bounce back, there will be lots and lots of opportunities for all of us, as consumers, uh, as employees, as small business owners. And the future is very bright in a market like India, which has huge potential for growth. And where the specifically on the financial services side, we have not even scratched the surface. So, any one of you who's in financial services, or who wants to make a career in financial services, or who has anything directly or indirectly to do with financial services, the careers are very bright, and opportunities are very bright, in any which way.
Thank you very much, Manoj. So, on behalf of everyone watching, right, you talked us through the future, and what we can expect 5 years from now in credit cards. I think it's a very exciting 175 million outlook. You told us how one can make best use of your card benefits, and lastly, about how digital is here to stay. We appreciate your valuable time, and I've learned a lot. It's been a pleasure chatting with you. Thank you.
Thank you, Adil.